Aloha, YouTube investors. How is everybody doing today? My name is David Yansen. Welcome to my channel. Today is October 29th. It is Thursday, 2020, and it is earnings season. So we have been going through my three main portfolios and talking about the individual holdings that I have that have announced their earnings for this quarter. Some are quarter 3, 2020. Some are quarter 1, fiscal year 2021. And this company that we're going to talk about in this video is Equinix. They are in my Roth IRA here, and M1 Finance is what you are seeing right now. So M1 Finance portfolio, like most of the stock market, has taken it on the chin a little bit. At one point, if you've seen my previous videos, you know that this current value number was up over 7,400. Now we are down to 7,183. I did start this September of last year, so it is about 13 months old or so. And my return is back up to over 10.5%. So that is good to see that the return is back up. I have been contributing, like I say in all my videos, I contribute $100 every single week into this portfolio. My other two portfolios and individual accounts portfolios. Fidelity is an individual account, which is a dividend growth portfolio, and I also have capital gains, more of a risky portfolio with Robinhood, and I have some videos on those two portfolios as well if you want to check those out. So I just did videos. Pretty much everything from Fidelity is completed as far as my holdings are concerned, with the exception of Costco. I believe it's Costco is the last one that hasn't reported earnings for the month of October. And then AbbVie, I hold in my Fidelity account. They report their earnings next week or the week after. I think it's either the first or the second week of November. So from that portfolio, we've talked communications, AT&T, Verizon. We've also talked Tesla, and we've talked the banks, JP Morgan, Bank of America, and then I've also done earnings on Johnson & Johnson, IBM, and Intel. The only one I didn't do, which started before, I guess, official earnings season kicked off with the banks, was Pepsi, and I'm not sure if, I guess I should still do a video. I really, really like Pepsi. I'm still trying to find another entry point to add more shares to them. So, but for this video, we were talking Equinix. If you are not familiar with Equinix, they are a real estate investment trust. I have them in my REIT slice. My REIT slice has been fluctuating all over the place throughout this year, which isn't uncommon for real estate this year. Interest rates are really, really low, but some of the tenants haven't been able to pay, or they've had to defer payments, and that makes it harder for them to gain in revenue. But Equinix is on the opposite spectrum of that. Equinix is a data center. So they build these warehouses, these buildings, and companies rent out and put their servers and everything like that inside there. So Equinix has done relatively well during the stay-at-home economy, because more people either working at home, taking classes at home, and so there's a lot more data being exchanged between offices and stuff like that. I own a half a share. I just put in a buy order to put my full $100 in, my full $100 that I do every single week into M1 Finance, into Equinix for this time. Their dividend is coming up in the next dividend date. I got to go to Seeking Alpha here to see when their ex-dividend date is. I forget. I believe it's $2.66 per quarter, which is really, really high, but they're still not paying a whole lot as far as the payout ratio is concerned. This number right here, as far as dividend growth in Seeking Alpha, is wrong. I believe they're at 8 years of consistent dividend growth, not 3 years. But the ex-dividend date is 11/17, so I'll probably this week and next week put both into Equinix just to hit that ex-dividend date. So I won't be at one share, but I'll probably be, I'll be closer for getting this $2.66. So dividend yield 1.44%. Look into this real estate investment trust if you're looking for nice capital gains and dividend paying real estate investment trust. That, in my opinion, is future proof because they focus on data centers. So as far as the numbers for quarter 3, funds from operation is really what you look for to measure your real estate investment trust. Revenue is nice to see, cash flow is nice to see, but you want to see what their funds from operations are, which is FFO. And this is Zach's research website that we're looking at here, that I'm getting the numbers from. So this is from today. Equinix, it says, posted strong results for the third quarter 2020. We're on adjusted funds from operation, and adjusted funds from operation is better than the regular just funds from operation. So that's why I chose this article versus some of the others that just talked about their funds from operations. So their adjusted AFFO per share was $6.48, which is beating Zach's consensus estimate of $6.03. So good numbers. The figure also improved 17.4% from a year ago quarter, which was $5.52. The upside primarily stemmed from steady growth in interconnection revenues, which is basically video conferencing, work from home, like I mentioned, stuff like that, because they do cloud connectivity, data, all that type of stuff in their buildings. Total quarterly revenues were $1.52 billion, surpassing the consensus estimate of $1.5 billion. Also, the top line figure improved 8.8% year over year, representing 71 consecutive quarters of revenue growth, which I like that. That is amazing, because that means that eventually, if this continues, if this trend continues of revenue growth, that means they're going to keep increasing their dividend payment, which in general REITs have to, I guess they don't have to, but I guess if they pay the majority of their profits back to their shareholders, then they get certain tax advantages. So they want to pay that dividend anyway, but I just don't want to receive a regular dividend. I would like to see dividend growth, especially from my Roth IRA. Some other companies that I have and other portfolios, even my Fidelity, I don't mind if their dividend isn't growing substantially every single year. But for my Roth IRA, I would like to see, 2%, not like 0.5% or something like that. So, and then recurring revenues were $1.43 billion. That's up 8.5% from a year ago's quarter. Non-recurring revenues improved 13.2% to $87.7 million. So, and then as far as geographical regions are concerned, just looking at that really quick here, I'll zoom into it so that you can just kind of read it. I'll just kind of summarize it. Revenues from the 3 geographical regions increased year-over-year basis as well. The Americas, that's Middle East, Europe, and Africa, and Asia Pacific jumped 4%, 13%, and 12% to $672 million. So gross margins, 67%, stable year over year. Total operating expenses were up as well too, almost 14% year over year to $463 million. And then as far as the balance sheet is concerned, Equinix third quarter with cash and cash equivalents of $2.6 billion. So they do have, this isn't really a lot of debt. It's only $12 billion. And I know $12 billion is a lot of money, and that is a lot of debt for companies to have, in my personal opinion. But there are other companies that I own, like AT&T and I believe IBM and Intel and even Verizon, that have more than $12 billion in debt. So I don't see that as that big of a deal for this company, especially seeing how they are making more money year over year as far as their funds from operation is concerned. So for the third quarter, $2.66 per share. It will be paid on December 9th if you own 1 share. So the stock is high, at trading at $700. I think that is okay. Even though good grief, I always start to lose my train of thought. The PE ratio is 130 times. I think it's okay, because in my opinion, it's a future-proof company. So sometime it might be trading at $740, which I hope it continues to go up. But if it goes down to the $710, I'll for sure add some more. But right now I'm adding some more just because I think they are a good, solid dividend growth company. Yield only 1.35%, but that's okay, because being a future-proof company, that yield will continue to grow as the dividend continues to grow. Hopefully, we kind of keep our fingers crossed. So the other videos that I have coming from my Robinhood portfolio are Amazon and Facebook. And I believe I have one other, but I've already done Starbucks and Shopify and Fastly. from my Robinhood portfolio, and then from Fidelity, I already mentioned the last one that I need to cover is Costco. So stay tuned for those videos, as well as my dividend tracker that will come out tomorrow or Saturday. And that video is just basically how much money I am going to earn. There we go. I am going to earn for 2020 in dividend payments, and then I show you the estimated value all the way out 25 years to 2044. So have a great day, everybody. Be safe and healthy. Mahalo and aloha.